Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Milling Week and London UK Feed Week. I'll start with Paris Milling Week. The market here in August, as elsewhere, constructed a new pattern. It built a mid-August to mid-October ascending wedge pattern. That is highlighted in dark blue on my daily chart. Mid-October prices dropped out of this ascending wedge pattern and pushed down through the long moving average, currently 347. And 4 weeks ago down through the short medium moving average, currently 333. And also the medium moving average, currently 330. By doing this market showed an earlier bearish incentive compared to the other grain markets. So there were, I say were as one avenue is now sealed closed, there were two avenues for this market, though I'm sure others will become available eventually. The first avenue is still live and is the straightforward move down with appropriate potential targets for the ascending wedge pattern. Thus the primary target on the downside was in the 331 zone, whilst the secondary harder to reach target X1 is down in the 296 zone. On Monday this week the market punched down through the 50% Fibonacci line of the August 2020 to May 2022 move at 307 and in the process reached the primary target. The next bit was a little more difficult, as we had the low of August at 301 and 3/4, or 301 and a quarter I should say, just below. Well, on Tuesday prices punched down through this, if only just closing below it, if only just there as well. However, that session being a just or only just action was not enough, and prices turned back up on Wednesday with a bullish open and close white Mariposa. The question now is whether the move down was enough. Has the support from the August low been enough to turn prices higher and maybe, just maybe make a possible double bottom? Personally, I am not so sure right now. You see, we have so much ammunition above the market that I suggest the bearish incentive is still there. Prices would need to clear the 50% Fibonacci line at 307 on a closing basis, something it really hasn't been able to do as yet. Then fill the gap left over from last week between 310 and 3/4 and 311 and a quarter, before tackling the start of the real overhead resistances, that kickoff that is, from the 50% Fibonacci line of the March 2021 to May 2022 move at 315. That being said, the avenue below is no easy avenue. Below target X1 we have the slowly rising neckline of the October 2021 to December 2021 head and shoulders top. And not that significant neckline, but given what's happening in the other grains, this is perhaps worth looking at. And then the combination of the big old 50% Fibonacci line of the September 2009 to May the September 2009 May 2022 move, and also at the 2012 high, both at the 279 zone. Perhaps then, and only then, is it only worth looking down to possibly target X1 in the 296 zone rather than further right now and then assessing the situation after that. London UK Feed Week. From mid-July to the end of September we had a shallowly bearish channel that morphed into a shallowly descending broadening wedge pattern, which morphed again in mid-August into a bull channel. This bull channel is highlighted in blue on my daily chart. In mid-October the market made a weekly key reversal down that broke down through the lower bull channel line and started the next major move, this time a move lower. Prices additionally broke down through the medium and long moving averages, currently 264.80 and 282.95 respectively. Last week I asked you, and I quote, "Watch out for this pair as they are on course to make a dead cross soon." And that's the medium and long moving averages. End of quote. Well, this week they did. This is a lagging bearish indicator. Prices were sort of held up during late October and early November by the 50% Fibonacci line of the July 2021 to May 2022 move at 262.5, which I'd previously suggested might fulfill that role. However, 3 weeks ago that support gave way, and despite a seemingly valiant effort 2 weeks ago to try and move prices up, prices only managed an outside week that had no strength, as can be seen by last week's actions. So, with the breakdown through the lower bull channel line, it leaves us here, as elsewhere in other grain markets, initially left with two avenues going forward. Eventually the market chose the first of the two. I described it thus last week, and I quote, First is a straightforward move down, with potential targets for the break below the bull channel. In this case, a primary target on the downside was already achieved in the 269 zone, whilst the secondary, harder to reach target X1 is almost achieved in the 239 zone. End of quote. This week we saw prices punch down and close below the August low at 251, the 50% Fibonacci line of the September 2019 to May 22 move at 245.10, the neckline of the small December 2021 to February 2022 reverse head and shoulders bottom, currently at 242.30, and finally reaching down on this week to reach and slightly exceed target X1 at 239 even. I said last week, and I quote, "We now have to see if the 239 zone will hold this decline, which includes the previous all-time high at 238 3/4. If it doesn't, then there's a series of old congestions from some dating from 2012 between 230.10 and 223.10, and another from 2013 between 215 even to 217.80. These may in turn be in the frame, but first let's see what the 239 zone holds in store." End of quote. With the move back up after slightly exceeding 239 level, I am minded to still say wait and see what happens now at the 239 zone. There is one potentially new factor to add into the mix. I'm not even sure if it is genuine or not as yet, but we may have an October to date small bear channel, currently 231.95 to 248.5. Now I've added it onto my daily chart, but for the moment I've chosen not to highlight it, at least until I can see it perform. The one thing it has in its favor is that the short medium moving average seems to be paralleling it, just under the proposed upper bear channel line. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.